Now, here's the book. Let's bring it up here with Luigi Zingales, Saving Capitalism from the Capitalists. Rajan Rajan and Luigi Zingales, of course, Professor Rajan with the IMF for years, and Professor Zingales busy on so many fronts. Wonderful to have you here on a summer Friday. Finally, quiet markets. Let's go right over to the terminal. Michael Darda just publishing. This is the Bloomberg Financial Conditions Index. Zero is right there. So here's good. Here's bad in 2010, here's a recovery, and look at this damage of the last couple days. This is an 11 ratio, Bloomberg Financial Conditions Index. Thank you, Michael Rosenberg. The IMF uses it. As we go into Monday and into this weekend with Merkel and Sarkozy meeting, how critical is the situation in Europe?
I think that the situation in Europe remains critical. The system is not stable, and the politicians are not given a convincing sort of a solution of how to fix the problem of Italy and the euro in general.
What is the difference between European politicians and U.S. politicians?
I think there is not a huge difference. It's just that the situation in Europe is worse right now. So I think that the danger that they don't act soon is much larger than in the United States.
A great op-ed the other day here. Let's bring it up here. This is Zingales and Parodi. Tax trio would put an end to Euro arson. What a great phrase, Euro arson. There's no reason why Europe should continue to protect the arsonist who causes crisis. This plan shows that it's possible to put out the fire, catch those who lit it, avoid free riding, and preserve equity. First of all, who are the arsonists?
I think the arsonists are actually sort of the investors in the debt market, especially the debt of banks that feel they should be secure every situation. And so they get an extra yield for the investment that they have, but they are not willing to take any risk. And
is that the ultimate free ride here?
It is the ultimate free ride, yes.
When you look at the commercial banks of Europe, we have been surprised by their remove, their distance. Within all your discussions with the Italian government and others, are they more engaged than we actually believe?
In driving the decisions, absolutely. And you have seen the ban on short sales today in Europe.
Yes.
I think that they've pushed for it very hard.
And that must have made you cringe. I mean,
yes.
I can just see you or Cochrane or frankly even Paul Krugman going, you've got to be kidding me. What does a ban on short sales accomplish besides FaceTime?
I think that in the very immediate moment, there is a coverage of the short, so there is a temporary positive effect. And so people like that. But long term, there is no real effect in preventing the inevitable, which is the decline in those stock prices. And long term, there is actually potential cost because the markets are less efficient and people don't find out the bad news.
Let's bring up this chart right now here. Zingales looks for austerity. I want to talk about this. I mean, here's the Italy-German spread. Up we go. Crisis. It has come in. Does Prime Minister Berlusconi, does he have a celebratory Italian Chianti here? Does he, whatever, Tuscany wine, whatever. Does he have a celebratory wine here as that comes in?
I don't think so, because it came in at a very high price for him. He is basically now an acting government for the European Union. The European Central Bank gave sort of a series of measures that he has to take. These measures are not even published, so it's not public information, but everybody knows that they exist, and then he acts under this sort of control. So he has basically lost his sovereignty.
I had the privilege of speaking to you from Venice once. You were most upset about two things, a financial crisis, and as I recall, the Italians didn't do that well in the World Cup. It was one of these two things. I want you to say right now for our American viewers and frankly around the world, Prime Minister Berlusconi, we see the media, the hype, the social stuff. How is Prime Minister Berlusconi engaged with Italian economics and with the vitality of their GDP?
So I think that Berlusconi was a very successful businessman and very dynamic, and is a very good salesman who appeals to, I would say, the underbelly of Italians. So he is extremely popular among Italians, especially sort of wannabe entrepreneurs in Italy, but he doesn't have a good sense of the economic problems at large. His view of free markets is the view of the real estate market, which is the most corrupt market that you can imagine, even in the United States, and is not really
worse than the United States.
Yeah, and is not really a sort of a very competitive market.
That's a pretty exclusive right there. Zingales buries U.S. real estate industry. Let's look at this chart. Let's switch to the United States. 2-10 spread. This is what I've been watching all morning. There we are. Up we go. Steep yield curve. We roll over, and then just like the Bloomberg Financial Conditions Index, we crater, and we've stayed down. Luigi, the 10-year yield's up a little bit. Curve flattening today. Is it just simply, if you're at Booth teaching curve flattening, weak economy, is it that simple?
I think that in the old days it was that simple. I think that today is a bit more complicated because we have a lot of people intervening in the market and trying to distort market signals. I think that my major quibble with the Federal Reserve is that the Federal Reserve is involved in the major market manipulation, if you want, of U.S. history.
What would happen if they did nothing? What happens if Bernanke wasn't accommodative here at 215 the other day?
I think that probably interest rate would have gone up and probably would have had a slightly worse economic situation. But I think there is a cost in the short term and then the benefit in the long term. I think that the markets don't know where to go because they're looking at the Fed, they're not looking at the fundamentals.
What is the common ground that you and Professor Krugman of Princeton have? There's a polarity here between much of economics, the Chicago school, or maybe a newer Chicago school, not Frank Knight, not Milton Friedman. There's a Cochran, a Zingales, and others. What's the common ground between Cochran, Zingales, and others, and what we see from a more East Coast school?
Oh, I think that there is definitely a lot of common ground on every microeconomic decisions. I think that probably Krugman agrees that ban on short sales is silly because it's a microeconomic based fact. And in the last 20 or 30 years, economics have collected a lot of facts that are useful and we basically all agree on. Mm-hmm. I think that where we might disagree more is on the big macro political decision. But another fact we both agree is that the bank debt is subsidized, and this is not good.
The bank debt is subsidized. Let's bring up a chart for later in the program. You've seen this many times before, folks. This is a shocking chart. The median price of housing in 2011 dollars. That's in 2011 dollars, right back to norm. You and I have had this conversation pushing 4 years now. Where is a policy to clear our housing market?
I think that I'm in favor of policies that don't distort market prices but try to make market to work. So I've always been against policies that try to influence house prices, but I am in favor of policies that try to fix the existing problem in house prices today, which is a debt overhang. There is too much debt, and there are too many people with a house that is worth a fraction of the debt they have on. Mm-hmm. And so if they are ruthless, they leave the house, creating problems to the banks and to the community. If they're not ruthless, they pay an excessive amount. And I think we should help the transition and renegotiation of this debt.
And you see here the heart of the matter, homeowner recovery. It hasn't happened. There's a vacancy rate, the vacancy rate for homeowners, rather. And you see it just has not come down. Neil Sass was the first one I heard the phrase ring fence. Luigi, how do we ring fence this vacancy foreclosure issue? How do we clear it out and get it separate from a normally functioning housing market?
I don't think that the solution is to ring fence because eventually it will come to market. I think that the problem is eliminate this debt overhang as we discussed. And I think that I have a long time ago made a proposal with Eric Posner trying to facilitate that with a prepackaged Chapter 13 where you could have some guidelines for renegotiating people who are underwater.
Booth School. Yeah. How do you get into your courses at Booth? I hear it's like a fist fight. What is the process to have the privilege of getting into a 200 or 300 session room with you? What is it? What does this thing go through? It's like getting tickets to Wrigley Field.
First of all, the sessions are not 200 people, are 60 people, and that's the reason why it's such a privilege. And second, we have a market. We are a market-based institution. We have an auction. And
you auction off Luigi Zingales.
Not just me, every professor.
That's fabulous. That's very, very cool. What do they pay extra for you then? I mean, would you get bribes?
No, these are actually fictitious prices in the sense that don't pay any extra cost, but when they join the school, they have a budget of points that they can bid, and it's a way so that you have your fair share of your favorite professors, but not 100% of them.
I was in Chicago the day, most tragically, that Milton Friedman died. Is Milton Friedman still in the halls of the University of Chicago?
He carries still a lot of influence, yes.
Okay, let's go to something a little bit technical. Folks, we always got the certitude. I'm as guilty of it. It's an elegant chart. You know, we just get too simple. I'm as guilty of this as anyone. We're not Japan. The yellow line is the zero bound, and that's a difference in yield between the 2-year and the 10-year in Japan. It looks like a bad pulse on a bad medical show. The spirit of a cyclical American economy is that white line. Yes, our 2s, 10s has come in, but nothing like. Luigi Zingales, are we Japan?
No, we're not Japan. I think that Japan suffer, number one, much bigger problems after the explosion of their real estate bubbles, and they clean up the bank balance sheet in a much longer period of time. So I think in that respect, the United States are doing definitely better.
And another idea here is, are we in a depression? Ken Rogoff calls it a great contraction. There's all these different phrases, but I get upset when I hear people compare and contrast to the 1930s, whether it was the industrial or agricultural Europe flat on their backs, or over here in the United States. It's not the 1930s, is it?
Not by any stretch of the imagination. It's a difficult economic time. There are a lot of uncertainties, and there is a lot of unemployment, but we can't compare. I think it's unfair to compare it with the depression.
This chart, population-adjusted exports for the United States. We are a more open economy. We're not like Germany. We're not like some of the Asian nations. Chuck Grassley on earlier from Iowa with that big John Deere tractor going by. The president has talked about this. Is an export-led solution? Is that where the president should be heading?
Definitely, the United States should export more because we have a commercial deficit, so we have to try to catch up. It cannot be the solution for the entire world because we know the entire world is a zero-sum balance, so not everybody can come out of this recession just increasing export. But the United States definitely should do that.
You've talked a lot recently about regulation, writing about Dodd-Frank and the rest. You're against the gumming up of the markets. Can there be a constructive regulation?
Oh, absolutely. The question is whether the current system can develop such a constructive regulation. I think that, unfortunately, the right pressure for regulation comes from people who are not particularly informed. And when we go to the details is completely captured by the vested interest. So most regulation that we have ends up favoring the regulated and not favoring population at large.
Confidence. Let's talk about it right here. Joe Livornia, brilliant note with his team at Deutsche Bank. Carl Riccadonna, we assume a negative 60 on the Bloomberg Consumer Comfort Index would be low enough to become really, did I write that? To become real worries, I think, about the outlook. Whatever that is, you get the idea here. We're not there yet, but this confidence thing is a big deal. Alan Greenspan spends a lot of time talking about this. How do you boost confidence in an economy short of GDP?
Oh, I think it's very simple, is to be calm, don't change the rules in the midstream, and give a sense that we have a well-functioning, well-regulated economy. I think that what really scares investors are the unexpected things, and what really scares sort of consumers is the fact that they might not have an income in the future because the economy is not working.
Do you look at nominal or real GDP?
Oh, definitely real GDP.
I look at nominal. We have an argument. I wrote a piece for EconoChat where I said, in panic, everybody thinks absolute, almost like it's 1820s or 1830s, Ricardo or Mill. When we're a marginal analysis, everything's got to be dynamic and flowing. What is the rate of change? What is the thing you're watching right now that's marginal, that's moving, that's dynamic within this crisis?
Oh, my favorite thing is the spread between the Italian T-bonds and the Bund, because that's an indication of the stress that there is in the euro system.
Yeah, bring that up again. Chart 6, if you would here, Rex. We'll give you some time to do that. Zingales ripping up the script. There it is. Zingales looks for austerity. Italy-Germany spread. There's the Italian 10-year versus a German 10-year. There's that stress. What does austerity mean? Is austerity in Italy or in America, is it different than in the United Kingdom?
So far, I think we did not have real austerity in Italy. I think that we had one decade of lack of growth, which was like terrible, but not really austerity, especially in the budget and the public budget. I think that what Cameron has done in England has cut dramatically costs everywhere, and I wish the Berlusconi government did the same.
Okay, let's bring this chart up again. Chart number 4, that was my mistake, Rex. I meant chart number 7. Excuse me. That was my fault. It's Friday. I need a day off. Okay, nominal and real GDP. The white line and the difference to the blue line is essentially inflation. There's a crisis. The zero bound in green is 4%. A lot of people, Luigi, would want to say, let's inflate our way out of this mess and goose that white line up above 4% to create jobs, create animal spirit, create investment, or the spirit of investment. You say that's too high a price to pay?
Yeah, I think it's too high a price to pay. I think inflation is a tax, like every other tax, and is highly distortionary and highly unfair. So I would not advocate doing that. However, I understand why people ask for this, is because they want to get out of this sort of debt-driven recession. I think that there are better ways to do it, which is to renegotiate the debt. And even at a cost sometimes to force or nudge some renegotiations, but I think that's what is needed to be done.
Within Greece or Italy, even France, maybe we can talk about some form of renegotiation. How does the United States renegotiate itself out of the mess we're in if we're working with the so-called bond vigilantes?
I think that the U.S. government debt is not too large, and if the economy restarts growing, I don't think it's a problem. So I think that we don't need to renegotiate that. We need to renegotiate the household debt, which is excessive in the United States. I think that will solve a lot of the problem and will get the economy restarting. And it's a completely different story when it comes to Italy or Greece or Ireland.
You mentioned the commercial banks of Europe maybe taking a haircut earlier. Should the U.S. banks take a haircut on all those mortgages, those foreclosed properties?
I think they should. I think that they should recognize that they're not going to get that value, and if they are willing to take an haircut in exchange for something, and says my proposal with Eric Posner was take an haircut in exchange for an option in the future if the house prices appreciate.
To get an equity kicker on the house if it goes up in the future.
Exactly.
Why is that so hard to do?
I think that banks really don't want to do that because they are basically betting that either the real estate market will go up, and so they are better off not renegotiating, or will go down and they will basically fail, and so they don't care.
That about sums it up.